Thinking about a credit card cosigner? Know the risks before you ask. Here are the 5 things that matter. A credit card cosigner isn't a character reference. They're taking on the same legal debt. That means if you don't pay, the issuer can collect from them, not just you. And if your real goal is approval, a cosigner is often the wrong tool. A secured card builds credit without risking someone else's finances. If you just need a score boost, becoming an authorized user can help with less liability. For younger applicants, the Card Act also limits who can qualify, and removing a cosigner later usually means closing the account. The main reason to avoid cosigning is that the downsides are shared, and they show up fast. Joint liability means the cosigner can owe the full balance, not just their part. A single 30-day late can hurt both credit profiles because the late payment can report on both files. Fees and interest also hit the account either way, and high utilization, like carrying 7% of the limit, can drag both scores down. If the balance goes to collections, both people get contacted. And once you're in, it's usually hard to remove the cosigner without closing the card. If you still plan to cosign, treat it like a formal contract, not a favor. First, confirm the issuer even allows cosigners, because many don't. You'll typically submit the cosigner's income, debts, and basic identity details, since the bank is underwriting both people. Expect a lower starting limit than you hoped, because the issuer is limiting risk. Read the APR, late fee, and penalty APR terms, so one mistake doesn't snowball. Then set rules: who sees statements, who pays, and by what day. Finally, put overspending barriers in place on day 1, because the fastest way to break trust is running up the balance. A cosigned card should be a short, controlled bridge, not an open-ended account. Pick a clear goal like 6 to 18 months, long enough to build payment history, but short enough to manage. Use autopay for at least the minimum, so you never hit a 30-day late. Keep utilization under 10% if you can, because that's where scores tend to look healthiest. Add a spending cap by using the card for one small category, like a single subscription. Also be honest, this doesn't fix debt problems, it only adds shared responsibility. And agree on the exit plan up front, because removal often requires closing the account. Most people considering a cosigner have safer options that still build credit. Becoming an authorized user can add account history with much lower legal liability, since the primary cardholder is responsible for the debt. A secured card is even more controlled, because your deposit sets the limit and reduces the lender's risk. No matter which route you choose, autopay helps prevent 30-day lates, and paying before the statement closes can keep utilization low on your credit report. Set spending guardrails like alerts and a tight monthly cap. And if you do cosign, only do it with a written exit plan that everyone agrees to. One 30-day late on a cosigned card can damage both credit profiles at once. CreditCardAgent can match you to better options based on how you actually spend and show the estimated annual dollar impact versus your current card. It's free and takes about 3 minutes. Links in the description.